Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, July 5th, 2018. Let's talk trading, trade management. You know, the next screen, you know what that's going to be, right? Money and risk management. I talk about that every day. But let's talk about trade management. Do you have a trade management system or a plan? In other words, do you have steps that you go through step by step to make sure you're managing your trade properly? Now, what do we mean by managing a trade? I mean, you enter a trade, then you sit there and you watch it, then either you decide to take profit or you let it trigger your stop loss. That's pretty much what most people think trade management is. But it can be a little bit more than that. For example, scaling in and scaling out. I mean, entering a trade isn't really so much about entering at a pinpoint price per se. It's usually entering within an area or a zone, hence the rat zone or the wick zone. It's so long as you get in an area and maybe you build a position. For example, some people, if they buy and price goes up and then it pulls back, 50% or 61%, they might add on because, trade's going in their direction. So that's how they manage to trade. They stack on and then, they might take profit the same way. Or they might just say, well, once it hits a certain level, I'll take half off and let the rest ride, move my break even up, and let it see if it takes off or not. See if I can hit the home run. That's one of the ones I usually use. So it's all about trade management. And I was reading a few things this morning on critical thinking and systems and habits. And that's why I'm bringing this idea to you today. It's because I don't think trade management really is discussed or is really considered. I think it's something that everybody thinks it's obvious, it's simple, it's, common sense, etc. But what I think they do is they fail to have a systems approach to it. And you can Google systems approach, systems management, you'll get a million hits. Critical thinking, millions of hits. So you can do some homework and come up with your own ideas, because that's how it really needs to happen. I can lay out what I do, but it might not suit you. So sometimes you have to discover a few things on your own. I can point you in the direction, but you might have to blaze the trail. Because it's just sometimes it's not like it's like a bug out bag. If you ever watch any of my prepper videos, my bag's not going to work for you, and yours is probably not going to work for me, especially if you have some life-saving medication that you need. Same way with trading. Each one of us, we have a personality, we have a certain amount of ego and all that other psychological stuff, and that's the things that usually trip us up. And one of the reasons is it trips us up is because we don't have that system in place, that step by step, that process. I'm a fan of Deming, and I've been through all that quality control type of education. And as Deming would say, if you can't describe what you're doing as a process, then you don't know what you're doing. And it's just so easy to not be aware, to not put things down on a checklist, on a 3x5 card, or use my, TRO, my notes. That's what I use right here. You can take this indicator and you can load up 10 notes. You can have it right on your screen. And I've seen if there's a few people out there that have done that, and it's right there on the screen. So you have no excuse not to follow your trade management rules, your risk, money management, your entry, your exit. You can put it right there on your screen. It doesn't have to be complex, doesn't have to be 10 steps. It might just be 2 or 3. And that's all it takes. So let's go through the charts. And once again, money and risk management. You can see here, it's just basically a couple of steps. You decide the risk, the dollar amount or percent of your portfolio you're willing to lose on any given trade. And then you either calculate your position size based on the stop loss or the stop loss based on the position size. I mean, two things, very simple. Like I said, not complex at all. But do you do that? And let's look here. We can see that the dollar yen is still within the previous month's candle body, just 3 pips below that close. Really not much action. But today we've got the FOMC. Tomorrow we've got NFP. So we should probably see price either come up above the high or I would imagine hit the midpoint. I would imagine between today and tomorrow we should see some price swings. On the weekly, you can see here we're out of the wick zone, the weekly wick zone, just by a few pips, 2 pips, not much at all. Above the open by 12. You can see here between the high, it's just pretty much between the range. We're almost like right in the middle, dead center there. Once again, all gaps filled. And from the weekly open, you can see there's only 2 pairs that are over 100 pips away from the open. So once again, it's a holiday week. You've had what, trading just 3 days, but not much. But I'm sure by the end of the week, like you said, between the FOMC and the NFP, I'm going to see some movement. On the daily, a nice breakout over the high, 6 pips to the good at the moment. See, it's just not that difficult. Range, we've got 6 over 100. The yen only 41 pips. Basically, slightly anemic. Didn't make a new low, didn't break out of that low, came out of that wick zone. You can see 23 pips above. And looking at the buy zone, there was a trade, a few pips to be had here, a few pips to be had here, ditto. Once again, you see it didn't make a lower low, so that might have been a scratch trade. There's pips to be made, and you see it just basically came back and almost touched and barely touched these 2 times, and we're back up. And you can see the pivot point was right near the open. That was basically not even a pivot fade trade. Rat zone with a 41 pip range. There's really no play in the rat zone per se. Once again, pivot, that was irrelevant. We hit the pivot. We missed it yesterday, so you can see that 110.73 number just may get triggered in an hour or two when the FOMC comes out. Actually, no, it's about almost 4 hours away. Okay, here we go. Broken record, price action. One ball at the bottom. Oh, here we go. One ball at the top, red at the line. One ball at the bottom, green at the line. 3 ball at the top, red at the line. 1 ball at the bottom, green at the line. And we got a 1 ball at the top, so we're going to look for red at the line. I just laugh and chuckle because, there's always those guys who like to talk about hairy hindsight, but we do this every day. You can do it live, but I'm not really worried about the detractors and the haters anymore. In fact, they amuse me. I embrace them. And here we go. H1 candle color at the line. We're going to use the previous daily sessions, high, open, close, mid, and low. And we're just going to trade with the candle color at the line. And every now and then I get some comments via email or out on YouTube or something or on one of the forums. And people, they basically say, you make it so simple. It's just like, no, I don't make it simple. It is simple. I just help you to see that it's simple. I can't take the credit when you finally see it. That's you. I can't take any credit for that. I was just helped. And it's really that simple. Oh, it's funny. I was reading something about these different gurus out there. And it just cracks me up. All these people out there trading that slope indicator, the hidden divergence, and these people are just constantly trying to market. I mean, even some I don't know if I could say good buddies, but I can't even really call them trading buddies, but people I know and maybe have associated with via internet and the email, they're out there marketing. You only got one more day to jump in and get this, and all these lifetime subscriptions. I mean, really? Everybody's just gunning for your dollars. It just amazes me. It really does. Oh, and let me think. There's a few things going on out in the forums too. Some of these things are just so funny. I mean, remember trading cards? Maybe this is an idea, it just popped into my head. Now, this could be really funny. I should create trading cards for indicators. You have the RSI card, the MACD card, the stochastic card, and you can collect them. I mean, oh, that would just be too funny. I might have to, that, oh, that would be too funny. Now, let me know what you guys think of that idea. You know, collect these indicator cards, trade with your trading buddies. Hey, look, I got this new indicator, right? Anyway, wick zone. Price doesn't like to stay in the wick zone. Broken record time, as you can see. Dipped back in, got pushed back out the other end, in and out. And we've got the holo zone right here. There was a nice run up. It made a holo, came back, dipped in, dropped down, 10 plus pip trades there. That one was almost a 10 bagger. Well, let's see, not quite 10. Where are we at? 61. You're good for about 6 or 7 pips if you took that short there. And you can see the price action at the tick level. Really not much happening, 1 pip movement over the past few seconds here. It's not much happening. See, saw some 61s. Now we're printing 61 again. Inventory reduction bars. There's like a scratch trade there, very small. And you can see here, if you took that trade, that looked like a scratch because right there it didn't hold that level. Once again, applying the wick zone as an entry tool or exit tool. Just a daily, weekly, monthly, open, high, and low. You can see we're kind of stuck there. It was a nice pop up. Einstein line. Since I turned the computer on and brought up this profile, you see there's a few pips to be had. Now price is heading which way? Oh, it's below the line, so it must be heading down. Oh, wasn't I supposed to get rid of this frequency distribution display? Or maybe I just let you guys see it every day. Maybe it'll help. But in the meantime, just remember, it's not what you trade, It's how you trade it. Now get out there and drain the banks.